And great once again to have our monthly conversation with Wharton Emeritus Professor of Finance, Jeremy Siegel, who is also with WisdomTree. Jeremy, great to talk with you. And let me start out with what we've seen the last week or so with the markets because of Iran. It's been this back and forth. So how should investors be looking at this? Because there's optimism one day and there's pessimism another day.
Right. It seems like our podcast should be time stamped and dated because
Yeah.
10 minutes later it could change.
Yes.
Yeah, a lot of optimism on Friday. Iran saying straits are open. Well, they weren't open. And, we stopped an Iranian oil tanker. And so tensions are there. But what is interesting is the reaction has been relatively mild
Right.
in the markets. I mean, yes, they are down, but they're nowhere near down as much as they were up on Friday. What does this mean? The market thinks this is going to be solved, that
Right.
it is going to be resolved. Now, it could be wrong, of course, but I think it shows you the buying power in this market. This market is, is holding on to every favorable. Doesn't show any basic weakness. That means there's a lot of money ready to be put into equities on
Yeah.
any hint of favorable news. Unless the most unfavorable, of course, is we start bombing. They bomb back and really
Right.
damage infrastructure.
Right.
And that is the worst case scenario, which would really bring the market down. But right now, the market thinks that's a very low probability event.
So you just kind of lead me into my next question that when this ends, is the expectation that we should look for a run up in the markets even further than what we saw last week? Because, as you just said, there's a lot of cash ready to go into equities.
Yeah, no. Listen, if there is a deal, if Trump tweets, "We got a deal," you're going
Right.
to see the market up 1,000 points plus. It wants a deal. I mean, and earnings are coming out good. We're seeing the economy basically strong. It seems to be just moving through these higher gasoline prices and
Yeah.
and several other prices with much less uh, drag than many people had feared 6 weeks ago.
And the comments that the president made about gasoline prices didn't, as you said, didn't seem to have a negative impact to a lot of people because we know we're kind of in this right now. But I think the expectation is, again, if we see a deal done, then the expectation is that gasoline prices may not go all the way back to where they were before, but pretty close.
Well, actually, yeah. I mean, actually, I think we're going to stay elevated, not where we are now at let's say 420, and we were right before the war. I think 290 to 3.
Yeah.
I don't think we're going to go below 350, honestly, because I think there's going to be a risk premium in oil for a long time as a result of this, and the fact that all the countries are going to ramp up their strategic oil reserves. There's going to be a lot of inventory, a lot of cushioning that's going to take place. So I actually see it coming down if there's a deal, but not
Right.
by a lot. Um, the good news is that even at current prices, the average price after inflation is taken into account of gasoline at 420, let's say, is actually the same as the last 40 years. I mean,
Right.
we were unusually low before this happened. So, I mean, it's not like we're suffering, crippling high gasoline prices. We really just moved to average, and natural gas is low. Actually, has not rallied because we have a lot of natural gas in this country, and
Yeah.
that's also a source of a lot of people's power and energy.
I'm sure you have your focus on the Federal Reserve and what we will see play out on Capitol Hill this week. Now, we're taping this on a Monday. It's playing on a Wednesday. Kevin Warsh goes before the Senate Banking Committee on a Tuesday. So by the time we actually play this, we will have known what Kevin Warsh said. But it's an interesting dynamic that we still see play out here that
Yeah, I mean, they're. Uh, so let me give you my bottom line on what I think. Kevin Warsh, whatever he says, is going to be. I mean, he's already been, approved before, and
yeah,
he's qualified. He's going to be approved. Um, the drama is Trump going to drop his suit against Jay Powell, because Jay Powell says if you don't drop it, I mean, I'll
Yeah,
step down as chair as I must, but I'll stay on for the next 2 years,
yeah.
be a thorn in your side. I mean, I think it's totally crazy for Trump to pursue it when he could have his own pick and ally in there rather than someone who opposes him. But nonetheless, I honestly, it will be interesting to see what he says. But I think he's going to skirt around everything. He's going, they're going to say, "I'm going to lower rates. You can do this."
Yeah.
You can say it depends on what happens, in June when I become, the Fed governor. And given the pace of events, June seems like eons away.
Well, and obviously one of the other topics that will be brought up will be Fed independence. I mean, but again, that's one of those issues that he will, most likely kind of try and skirt around.
Yeah, I mean, he would always say, "Well, would do what it was to with lower rates." I don't know. And he'll be asked about the balance sheet. That'll go over the heads of most people, and they
Yeah,
don't really understand how it fits into anything. Anyways, they're interested in interest rates. He will say the independence is important, but we have to look at all features, and he's not going to commit to anything whatsoever. I think a more interesting decision is Supreme Court whether they say that Trump cannot remove Lisa Cook, because then
yeah.
that definitely means they can't remove Jay Powell from the uh, governor
Governor's role. Yeah.
position, not from the chair. That is maybe Trump's prerogative once his 4-year term comes up in May. But that is another that is an interesting issue coming up.
Let me switch up to AI because I continually covering this from a news perspective. I'm amazed that it seems like every week we get a new deal announced between an AI company and a chip maker that but still we are in an area where there is still so much more growth to occur with all of these different companies and a great time to still be an investor in a lot of these areas
Oh yeah,
because there's so much more room to run.
there's much more room to run, and the and in fact the run up since Iran has been almost a mag 7 run
Right.
more than anything else. And we thought we were having a big rotation, and we did, but the last 2 weeks have eaten up back to the mag 7, not taking preeminence but coming back, relying less on, whatever oil is, not cyclical the same way, it's secular. The big problem with any of those companies, and I think it's discounted in the price, is the fact that technology is moving so quickly that they can't be assured that their margins can be remained at the extremely high levels that they have.
Right.
And I mean that's the question. But until that breaks down, I don't see why they can't continue to be market leaders. But if there is a deal on Iran and oil comes down, I think the non-tech stocks are also going to do well.
One more thing I wanted to ask you before letting you go. I saw an interview with SEC Chair Paul Atkins this morning, and one of the things he talked about was market manipulation. How much of a concern is that still in the mix right now?
Well, are you talking about for individual companies? I'm sorry, I did
Yeah,
not hear his interview.
yeah,
Uh, I mean, insider information laws are as much as ever. I don't see evidence that they're being abrogated more than before. We have some talk about prediction markets, people leaking information, but that's a different ball game, really, than insider information on leaks on that. I mean, there always are. There are always a few. The government investigates them. I think around the world, the U.S. is still number one at catching these people. So let's hope they continue to maintain the integrity of the markets here.
so as we roll on for the next month, anything that you are really kind of trying to your radar is focused on as we move forward the next several weeks?
Well, I haven't yet. I do look at the money supply, and the money supply has been going up at a more rapid rate, and that has tempered my expectation of a rate cut. And in fact, I actually said I thought the next rate move, and it might not be for many months, might be a hike, and that
Yeah.
depends, basically on how strong this economy gets after the Iran situation at least is semi-solved, if I should use a term.
Jeremy, always great to catch up with you. We'll talk to you next month.
Thank you very much, Dan.
You got it. Jeremy Siegel, Wharton Emeritus Professor of Finance, and also with WisdomTree.